Okay, here we go. We are live. What is up, everybody? And welcome back to another morning open live stream. Good morning, everybody. It is November 22nd. We got 8 days left of November, which is still insane to me as I think about it. 8 days left until November, or until November ends. And we've got some stuff to talk about. Ahad, Jason, Richard, Morrow, good evening from Tokyo. That's so dope. Thank you for being here all the way from Tokyo. Too legit to quit. Gabe, ER. What's up? Let me just put this in my Discord. Let everyone know we are live. But yeah, it is another beautiful day to be alive. We're here. We're on this planet, we're on this world, and we've got some stuff to talk about. What's up with the emergency Palantir shareholder meeting? So Chris discussed it. Let me actually show you what it is. Chris pulled up something good yesterday. It's not that serious. It's like a restructuring of something that's not that important. So let me share my screen right here. Finally made it to the stream. Good morning, relax and chill. Thank you for being here. Gabe, making a Palantir video today. Awesome. So as you can see, amendment and restatement of our certificate of incorporation. It's really nothing. It's if the new certificate is adopted by the vote of our shareholders, we intend to fight. It's like this doesn't do much. It's regarding their F-class shares. It's not that interesting, but it's been out for a long time. So it's not an M&A. It's not this. It's not that. All the speculation we were doing yesterday ended up to be kind of pretty much out there, which I also expected. I was like, I don't think it's going to be anything much, and it ended up not doing too much. What's your Discord? That is a good question, and I always forget to put the stupid link inside of the chat and pin it, so I will do that. Daily Cowbell is back today as well, so super excited for everyone to check out the show. We weren't able to do yesterday because Tom had family issues, but we are back today and we're excited for it. Now, Tesla has dropped to a 52-week low. Okay, Tesla is officially its 52-week low, 168, which is wild. You did not expect Tesla to see 168, but we are here. I DCA'd at 178, so I got a little bit of some Tesla, but it's not enough to keep getting even more. I'm trying to beat you a number of Palantir shares. I think I have 2,300 now. I want to get to like 3,000 soon-ish. Hopefully by like mid 2023, I can get there. Right now, I'm keeping all my cash, and Robinhood is giving 3.75% on it, so it's actually not. It's not the worst deal. I mean, Robinhood's getting, when they give you 3.75% on your money, it's not too bad, just getting it from Robinhood. So I'm keeping all cash right now. The only buying I did was on Friday when I bought 18 Palantir shares and 1 Tesla. And that's pretty much it. Everything else is all cash and just hoarding it up. That sounds like a little... That's funny. Okay, so S&P 349 or 394. It's up 396 pre-market. S&P again is staying very, very stable. It is simply not letting itself go down. In general, the market is a bit, I would say, flat. So let's go to Tesla right now. In the pre-market, Tesla's 169, up 0.77% from 167. Who's watching the World Cup? And who's engaging with the World Cup content on Twitter? So the World Cup is on right now. Qatar spent $220 billion to be able to put on this cup. By the way, there was a guy who's wearing a gay pride shirt, and the Qatar officials didn't let him into the stadium. So it's they're holding their ground there, and it's a bit controversial, but they did pay that much money. And Twitter obviously should be benefiting. Twitter, Elon Musk shared a update yesterday. Twitter has 1.5 million DAUs extra than it's had since the past couple of weeks. So like they're averaging close to 260 million DAUs every day, which is amazing. Now, granted, when those DAUs, when the Qatari World Cup ends and the election cycle kind of gets over, the question is, are those people staying on the platform every day? Out of the 250 million people that use it every day, I would think like maybe less than 5% of them are actually tweeting and actually creating content. So there's obviously the question of engagement, but it's not a bad time, to be on Twitter if you're Elon Musk, or if you're talking about Qatar in the World Cup. Argentina lost. Can you believe it? This is probably the biggest upset ever. So remind me, when someone loses a game in the World Cup, are they out completely? Or do they have like 2 games and then they're out? Like, well, how exactly does it work? I feel like it's more than 1 game, but I'm not fully sure. I did not go to work this week to see Mexico's game. Wow, you guys are passionate about this. Saudi Arabia won against Argentina. Wait, isn't Messi from Argentina? Am I totally wrong on that? Doesn't Messi play for Argentina? Not at the first round. Okay, not at the first round. Good. But Messi's going to play for Argentina, right? Because he's if I'm not wrong, he's from Argentina. I hope I'm not wrong on that. And I know Ronaldo is playing for Portugal, right? You play for your home country when it comes to the World Cup. So Arc Innovation 3528, nothing down for there. Oh, Zoom. We got to talk about Zoom earnings. Okay, let's go into Zoom. Let's go into Zoom earnings. I forgot Zoom came out. Messi washed. Yeah, he's from Argentina. Messi's washed? Come on. Is Messi washed? Messi, I mean, Messi's supposed to be like the guy, right? Supposed to be the guy. Okay, let's go to Zoom and let's look at their earnings. Let's pull it up right here. Glitch Life, good morning. Thank you for being here. Let's pound is low. I think it's like 610 or 630, something like that. Okay, so here we go. 1.07 per share adjusted versus 84% cents per share, which means they beat it by 27%. That's pretty good. Beat EPS by 27% is not bad. Revenue, they meet 1.1 billion. They expected 1.1 billion. Wow. Okay. So the market didn't screw over Zoom. They kind of kept them flat, it looks like. I think it was down like maybe 2%, but nothing crazy. So 2 years ago, Zoom challenge was keeping up with the demand as pandemic usage drove revenue up more than 300%. Since then, Zoom has struggled to adapt to a non-pandemic reality. The stock has lost more than 85% of its value, peaking in October 2020, including a decline of 50% year over year. Revenue in the latest quarter ended up to increase from 5%. So yeah, in the previous quarter, revenue grew 8% year over year. The revenue stayed flat this quarter, which means at the end of the day, you know, they're not necessarily growing, but they're also not declining. At the end of the quarter, the company had 209,000 enterprise. Wow, that's a lot, up from 204,000. So, you know, they're up about 5,000 more clients. They said its online business, including customers that subscribe directly to the website, declined by 9%. These are the people that pay $15 a month, including myself. They expect sales of 4.37 billion. A little bit of a reduction. Just their earnings per share about to be 391. Implies 5% revenue growth in the fiscal fourth quarter. Yeah, look, I mean, that's not a great quarter from Zoom for a company that's supposed to be putting up $70 billion in 2026, as per Cathie Wood. That's likely not on the same trajectory. Good morning, Chris. Thank you for being here. That's going to happen, but it's not declining, right? I mean, they're growing. It's just a question of how big is the enterprise communication space in the context of video. Because Zoom is mainly video, right? They don't really have another offering like integrated Slack or chat type of service. So what is the TAM for video? Cathie thinks that like it's you know, the 70 billion in revenue. It's a $800 billion company. She thinks is going to happen. There's a 12x from here. Let's go to Zoom right now. It's down. It's down 6% pre-market, so it's down a little bit. It's, you know, the market didn't love it. I would buy Zoom if like I use the product every day, right? So I actually really do love the product. The problem is I do feel like all the share appreciation happened after the pandemic. And it's one of those classic stocks where trying to make a bull case for it after the pandemic just does not make sense at all. Like it just doesn't. Like I can't logically see why this company is going to be printing 70 billion. 45 billion is the base case or the bear case. 45 billion. They have to 45x their revenue in the next 5 years. That's Cathie's argument. Like, let it not be confused. That is Cathie's argument. I just don't. And Cathie didn't factor in Microsoft giving Teams for free. Yeah, it's like, it's really difficult. It's really hard, bro. Good morning, chat. Mark, thank you for being here. What makes Teams so bad? I've used Teams once or twice, but the integration of Zoom, like the just ability for you to just access and just like get a meeting started, it's so seamless, you know? There's some of those products that just do that thing and they become very big companies. Now, do they become as big as Cathie wants them to be? I don't know, but they definitely put on a good show. All right, 15 seconds left. November 22nd, 2022. I hope everyone's having a good week. This is the last week or second to last week of November, pretty much. And then November's done. and then we enter December. And then we get through December and we enter 2023, and we'll see what the markets have for us then. Thank you, everyone, for being here. 9:30 a.m. The United States stock market is open. Wake your ass up. It's time to analyze the stocks. Tesla, 168, up 0.2%, but down yesterday in a pretty horrendous day for Tesla, hitting its 52-week low. Disney, 96, now up 0.85% on the Daily Capital today. We talked about Bob Iger and his ability to take him over. I was watching an interview with Bob Chapek, who was the former CEO, and he basically admitted that they didn't realize how much content they would need to produce in order to keep Disney Plus subscribers happy. And well, if they had consulted me, I would have easily told them, hey, it's not a really a good business model buying all this content and then just shoving it down people's faces, because you have to get a lot more content. But nonetheless, that is the business model that they have. Obviously, they wanted to leverage the IP. Bob Iger was one of the main guys that says, hey, we have the best intellectual property in the world. Let's leverage that. The problem is Disney has $5 billion of debt, and the subscription business is not growing at the level that it was growing in the first year when they got to 100 million subscribers. Like, to get to 200 million subscribers is not that easy when the same content gets boring, which is the same problem that Netflix is having. Netflix now at 284. So I think the major issue with Disney is, can Bob Iger actually find a way to bring their content to light in a way that doesn't screw them in the long term by having to make, so much content. Tattooed Chef under $2, $1.87. Unbelievable. This stock has gotten absolutely demolished. Datadog, $72. Been learning a lot more about them. Not enough to buy them yet, but been learning a lot more about them. Target, 159. Coursera Gaming, 169. Roblox, or Rocket Labs, 42. And let's look at Roblox. Roblox is one of those stocks you would think is the future. I remember in November, it went up to 90 off earnings. Literally November 2021, it was at 50 and it just jumped to 90. And then it ended up going up to even 140. And I had so much FOMO, and now it's at $30 and you're like, is there even any value to Roblox? Probably is, but it's still a little bit of a bet. Grindr, up 4.7%, 11 million users, 765,000 paying active customers. There's so many internet companies that can affect so many parts of the world and so many different segments. Literally the fact that a gay dating app can have that big of a business to go public, there's just so much opportunity. Bitcoin is 16,000, Enphase at 307, Palantir at 711, down 1.18%. Opendoor, $1.63. Goodness gracious, man. Opendoor was $39 at one point. It was $7 for the majority of the year. And Opendoor has collapsed. I mean, I would love to hear the CEO of Opendoor actually speak about what's going on. Amit Atlassian team. Okay, let's add that one. This is a stock where I know the CEO is very bullish. He's added, he's bought shares all throughout this decline in the 200s. It's at 118 right now. I use Atlassian for Jira in my startup. We have a bunch of engineers and we assign tickets and all that stuff. So I've seen the product. It works pretty well. What's the market cap of this? $30 billion. Wow. So this is I want to go through these guys' earnings. I haven't done a deep dive on them, but these guys must have an incredibly architected sales B2B play, because they're selling mainly to businesses, and for them to be worth $30 billion as a B2B company, that's not bad at all. That's not bad. You see them banning. So the SoFi crypto thing, guys, this was a nothing burger. This was absolutely ridiculous. The fact that it was even some big discussion. SoFi is a bank, and so the senators just wanted to make sure that a bank is not trading crypto, right? That's because it's also a crypto exchange. The problem is the crypto exchange has nothing to do with the bank. There's no customer funds. There's no collateral. There's none of this stuff part of it. And it's 0.2% of their trading activity or something. So the whole SoFi bank crypto thing, I think it's absolutely nothing. It's just politicians trying to make sure another FTX doesn't happen. They don't even know what happened in FTX, so they just want to check all their horses. SoFi will be fine. I don't think there's any issue in that. SoFi needs to, figure out how to not dilute shareholders. That's the biggest thing for them. Also, their app, I would say 80% of good tech companies use Latin. Yeah, it's the absolute gold standard. I would also say their tech needs to get better, man. I bought some Palantir on SoFi the other day. The app is not good. Let me be very honest. I was on the first episode of SoFi Weekly. I said this. I was like, this app sucks. And coming from a guy who's building an app, I know what it feels like to have an app that sucks, because there's some bugs that you have that are annoying. There's these little, but My company has raised $300,000 of funding, and we have a couple of engineers. SoFi is a $5 billion company. At one point, it was like a $15 billion company, and they've got access to the best talent in the world. So it's uncomparable. There's other, there's another platform I saw that raised a $25 million Series A. I'm not going to say, they're a consumer social app. I'm not going to say the name of them, but I was just like, how do you raise a $25 million Series A and your app is still this? Now, granted, their app got better, but it doesn't matter how much money you raise. Like at the end of the day, like you got to be able to build a decent app, right? And SoFi just is too. It lets you know that talent is what really matters here, not just like the amount of money you have, because a good money can't save a crappy app. And I did not enjoy the experience of buying stocks on that app. It felt like discombobulated. I was like, how do I even buy this thing? Like Robinhood was easy. SoFi was not. So they got to fix that. Taiwan Semiconductors, $81. Again, still up 9%, recovering from 59 lows. Warren Buffett now 9% of it. Twilio at 45. Twilio, I saw a company I want to go into a little bit more. I know they're in the marketing space, messaging, stuff like that, but have never gone deep dive on them. NEO below $10. Lilium at 1.4, another Palantir SPAC. All right, let's head into CNBC. Thank you all, 130 people, for being here. Means the world. Let's see what the talking heads are talking about. See what they're speaking. Well, let's hear a little bit about Disney, actually, because we were talking about it. Investors are calmed by Disney's Iger's presence. Let's hear a little bit about that. TMC just signed a huge deal with Tesla. Really? Is that breaking news? Okay, I'm going to play this, and Chris, if you can send the link, that'd be awesome. Tesla's going to use them to produce all the chips for FSD. Wow. Buffett's getting some exposure to Tesla a little bit.
Exit in about 2 years, around 2025. He spent about half that time with one foot either out the door or back in the door. And there's a cost to that, right? If you're a talented executive at Disney who's been thinking maybe you have a chance to move up based on what Iger says he's going to do, you've had so many false starts. Disney's lost a lot of talent because of Iger either deciding not to leave or then picking Chapek in the first place. And now he's coming back, and somebody who's a great option isn't ready yet. He had more than a decade to prepare the next generation of leaders. So why do you, granted, yes, he's an excellent executive, one of the best ever, if not the best ever at a media company, arguably. But why do you pick somebody who's really bad at succession to come in for just 2 years and do your succession for you? Is the board abdicating its own responsibility?
I think he's going to, the board, the boards are panicking now because of the economic issues. But, I think he knows that. I think he knows that was a big mistake of his, of a pretty stellar career at Disney, is to not have done the succession correctly. And I think he probably will this time do it correctly and figure out the best way. It's one thing he left behind that wasn't great about Bob Iger. And so I suspect he's going to be focused on that. He's got to be. I think he of course moved them into streaming, which is very expensive. I think no one realized how expensive.
This is very true. Okay. So Bob Iger was the guy who said, let's buy Fox. Let's get Hulu. Let's get The Simpsons. Let's consolidate this stuff. Let's sell our stake in Sky, which they sold. They had a 30% stake in that to NBC Universal, and let's go direct to consumer. He's the one who he even chose Bob Chapek to be his successor. So now that it's not working, I think he feels a moral responsibility to come back. 1 second. Okay, here we go.
It was going to be, and this was going to be, and how big a fight this is. But if you're not in this, you're not in a media company if you don't understand that streaming is critical to the future. I think he is much more talent friendly. You can't just treat talent the way they did. It's critical for this company. And then lastly, I think it's really important that investors are calmed by him. There's a lot of activist investors running around here. And he is someone who, compared to Bob Chapek, can handle them better. And then let me do lastly, Bob Chapek just had one disaster after the next. And this last earnings call was really, I was sort of shocked by it myself. And it wasn't tenable for him to continue to run. He had lost employees, he had lost investors, he had lost, everyone that was critical in this particular company.
But this is really the last time you can have Bob Iger behind the glass, right? And in case of emergency, break glass. It's
I don't know.
It's always Bob. All over. It's always Bob Iger. Like, we're going into COVID, so we got to keep Iger. Now we're coming out of COVID. And I'm just saying. But he's really got to go this time after 2 years, right?
Yes. No. I mean, come on. All kinds of companies do this. Howard Schultz at Starbucks. Steve Jobs came back and left and came back. This is like not a new and fresh thing. He's got to find his Tim Cook, I guess, in a lot of ways, and find someone who really has the operational skills from a business point of view and has good relationships with content. And that might be Dana Walden. It might be a lot of people. It's a very difficult time to run a media company, and even a really good company like Disney is going to see trouble in this environment. There could be some really interesting things happening, and very few people could pull it off. The big things they need to do, like someone who's been here and knows the company inside and out.
Okay, so that definitely makes sense in the context of Bob Iger being the guy. Chris is saying it's worth the DCA into TSMC. So there's a really good article here that I want to share. I think the question for this is, well, the obvious is China going to invade Taiwan. Now, if that doesn't happen, then Taiwan is fine. If that does, it's a question of what could be the faith of the semiconductor company. Now, granted, it feels like it's not going to happen because it's so integrated into their economy, and China would be screwing themselves. But it's also like Russia-Ukraine happened. I think it's important to think about. So recent reports suggested that Taiwan Semiconductor Company would be Tesla's supplier for its choice of next-generation full self-driving computer. The chips that TSMC will be supplying to Tesla will reportedly be produced at the 4 and 5 nanometer processes. Tesla's lineup of premium electric vehicles is already among the most technologically advanced cars on the road today. Tesla's hardware computer upgrades have run into notable improvements, which would be supplied by TMC, would feature roughly 3 times the power of the current FSD computer. Yeah, man. I mean, shit. Like you can't argue with that. That would be a hell of a deal for TSMC because that means as Tesla grows, TSMC is going to grow, right? I mean, as Tesla grows, TSMC is going to be able to track up the results, the residual results of that. Tesla gets 5 times bigger, and they have that much more FSD. They're selling 3-4 million vehicles a year. Well, you got to have a lot of chips, right? And if you got to have a lot of chips at that point, then you get Taiwan Semiconductors. So that's interesting. That could be a that could be a unique bull case around Tesla and TSMC. Let's hear this one. Markets worry about 2023 investments in China. So now that we're talking about Taiwan, which is somewhat obviously related to thinking about investing in China, let's hear what this has to say.
Become more bullish on Chinese names over the past few weeks. Is the latest enough to reverse or even pause that sentiment?
Yeah, well, I think because the rally has been very, very strong, I think some of the internet indices had one of the best run on record, right? So in a very short while. So it's bound to take some profit off the table. But having said that, we're seeing some positive change. For example, JD.com's earnings is very, very strong. And also Tencent, one of the biggest gaming company in the world, is actually getting new gaming license approval from the top. And that has been suspended for almost 2 years now. So for a company that is earning 50% of its earnings from gaming, it's a big deal. So we're seeing in general, the sentiment towards the Chinese tech names are warming up, but then at the same time, because COVID zero, as your colleagues reported just now, and also, because the rally has been running very hard in the past couple of weeks, that's why, it's taking a pause here.
So how you're pointing to the fundamentals are looking better at some of these tech companies, but looking at fundamentals for Chinese companies is tricky because Beijing and the leadership there is the wild card, right? And from everything we've seen over the past weeks and actually last few years as well with Xi Jinping's government, is it focused, in your opinion, on economic growth or more ideology these days?
I think by March next year, the new leadership team will come in, right? So the 7 standing members will assume each other's each responsibilities in the government. So then, it's time for, the leaders to work on the economy. If you look at the economic numbers this year, it's extremely weak. And I think export growth has turned negative, and also retail sales growth domestically has turned negative as well. So if you go into 2023, investment is negative, exports is negative, consumption is negative, and the government is running out of money, it would make it very difficult to sustain the economy. So I would say for next year, economic work with back in focus.
How it seems like an awfully big coincidence that China relaxes the zero COVID policy, and then a week later, there's 3 deaths reported for the first time in 6 months. Is there the sense that part of the zero COVID policy was reporting 0 deaths from COVID?
I think when you relax the COVID zero rule in wintertime, when it's a high season for flu, some deaths bound to happen. Right? So for China now, because the COVID virus has sort of mutated to a much weaker form, but more contagious. And for China to reopen, it has to sustain sort of a 3 months, or maybe 3-4 months of surging confirmed cases.
Yeah, and so for China, I think he's making a good point there that for China to actually stay open, they just have to confirm that the surge doesn't happen at the level it happens. This is a good comment here. Someone said, imagine buying Tesla stock and being bearish on China. This is interesting because, China is a big growth part for Elon and Tesla. That's why Elon doesn't say shit about the Chinese government, because he knows, like, hey, I'm not screwing with these guys. We need their growth. China's a big market, man, and other companies like Facebook. Bro, if Google was allowed in China, it's the $2 trillion company right now. If Google was allowed, it's a 1.23 trillion. If Google was allowed in China, there's 1.3 billion people in China that are searching. I mean, could you imagine the level of just, like, if Facebook was in China, like if these companies got to be in China, the user bases would explode. I mean, these internet companies would just become gigantic. So the fact that Tesla is in China and has access to their user base, even though it's a competitive economy, but the fact that they have access to their groups, you probably don't want to say shit about China, and you probably do want to be not bullish as well, or not bearish on them. Amit, look at how far the 10-year and 2-year are now. It's 76 points apart. Let's actually pull that up. 10-year bond. The 10-year right now is at 3.771%. And they're away by 76 points. The 2-year bond is 4.525%. Again, they've inverted. The 2 years should not be paying you more money than the 10-year because you're taking more risk, leaving your money out for 10 years. So it's like, I don't know. Gary Black is tweeting about Tesla's need for a second price cut in China. Gary Black, bro, I've realized this dude, he just tweets all day. Like, that's what I realized. We're about to go to his Twitter right now. This guy is a fun manager. This is why Twitter is so valuable, bro, because you have constant access to, like, the audience, and you can just say whatever the hell you want all day. He has 250,000 followers. We've long argued Tesla delivery is the correct measure by which to measure Tesla growth, not production. We disagree with the view that Tesla can sell every vehicle it makes, refuted now by the second quarter in a row. Tesla must learn to use demand levers used by every other manufacturer. Is that marketing? Is he talking about marketing? Because when he says demand levers, he's talking about generating demand. And Elon's whole point is, like, I don't need to do that. People are going to buy my shit regardless. So I don't know, man. Tesla China insured units were 14,366 last week, the highest weekly rate in Q4. While new orders may still not be strong enough to avoid a second price cut this quarter, deliveries remain strong. So these are the Chinese companies that sell in China. Last week, November 14th to November 20th, Tesla sold 14,366 cars. And the only one that outbeat them is BYD. Yo, can we look up a BYD car right now? I've never these cars. Let's look it up. BYD electric car. Actually see what these look like. Because I've never seen one of these things. And if they sold 40,000 in a week, bro. That's a hell of a sale. Let's look at this. Okay. BYD electric car. Here, let's look at this one. Let's see what it looks like. Just for a little bit. It's not bad. Looks kind of dope. Looks kind of legit. Okay, it's a regular car. It's not too crazy, but 40,000 of them. Goodness. 40,000 of them. That's a lot. So yeah, the fact that Tesla's able to sell 14,000 of them in a week is not a bad thing at all. But again, they have to be in China in order for them to be able to actually do that at the end of the day. And you know, if they're not doing that, then that's obviously not the best thing in the world. Let's see what else we've got going on. Let's go back into the market on Webull. Let's see if there's any recovery or any major change. S&P Enphase at 305, team there, Tesla 168 down from 170. S&P at 395, man, it's not budging. It's not budging. Let's look at the 1 month. The lowest we hit was 390, and that was on November 17th. That was 5 days ago. We have not moved from that range. We have stayed there and been okay. Meta has also stayed at 108, up from 88, about 22% up. Spotify still stuck at 70. I'm really interested to learn how Spotify gets out of the bit of the problem that they're in. It's going to be interesting to see. Again, I think the platform is great, and I think they're going to keep growing. They have almost 500 million monthly active users. They just can't make money. And so that's the core issue with something like a Spotify. It's like they just can't fucking make money because music is hard. Music's hard to make money on. FedEx at 175, Disney 95, CrowdStrike. Does anyone own CrowdStrike? I've been more interested in cybersecurity as I've had my own startup and I've been learning about like DDoS attacks and things of that nature. And it's obviously incredibly important to have really robust cybersecurity. They went public in 2019 at $66 a share. So now it's at 130. So they were about a $15 billion company when they went public. Kind of like Palantir. Palantir went public at around 15 billion as well. And now they went up to 300 and now they're down to 1. So they've doubled since 2019 after basically quadrupling since 2019, which is not too bad. I mean, everyone is waiting for the FOMC minutes tomorrow. I think the FOMC minutes aren't going to say anything interesting other than, hey, we're not going to stop raising rates. I mean, nothing in there is going to be like, yeah, we're doing 50, not 75. I really would doubt it. Like, that just doesn't seem, I don't know. That doesn't seem like it would happen. So Coinbase, look at this, $42. Brian Armstrong, by the way, is selling some of his Coinbase shares. I want to see if I can pull that up, which is not a great sign for shareholder confidence, to be honest. I also don't think he's selling the shares because of taxes or anything like that. It seems like it's actually because he wants to sell. And it's like, bro, I get it. Like, you think the company might go under, you want to cash out at 40 a share, but like, my guy, this is not what we want to do. I have to go, meeting in 5 minutes. Love this community. Have a great day, everyone. Gabe, thank you for being here. Have a great day. So here is here's the picture of Armstrong. All of these are open market shares sold close to like 20,000. 1, 2, 4, 4, 8, 8, 5, 13, 13, 19, 19. Yeah, about 20,000. About 20,000. Open market sale. Oh, right here. 29,732. It's right at the top. So, I mean, doesn't look the best. Also, we are seeing that Genesis is likely another company that's going to go under in the crypto exchange. Unless they get bailed out, and they've kind of admitted that. The other thing we got to see is ARK. Cathie Wood bought 175,000 shares of the Grayscale Bitcoin Trust yesterday, likely because she feels Bitcoin's in a very nice opportunity. As you can see right there, ARKW buy GBTC Bitcoin Investment Trust 176,000 shares. And this is off Bitcoin having its worst day in a couple months. The other thing she bought is 168,000 of WUZI. This is a company I'm looking into a little bit more. They make glasses and stuff like that for you. It's like a 3D. I really haven't gone into it, but I have to learn more. But it's an interesting company as well. And then she sold 34,000 shares of NVIDIA after NVIDIA's up 40% over the month. Maybe that's why, because she bought NVIDIA when it was down, I think. And then she bought 7 million shares of Ginkgo Bioworks. Like, this is insane, bro. This is insane. Someone give Amit a super chat so Amit can get a new mic. Guys, it's not the mic problem. It's not the mic. The mic is a $400 mic. It's the everything else problem. put this towards fixing your mic. Cries on built-in. Thank you, Gabe, for the super chat. I appreciate it. By the way, Gabe got me a bear. I gotta show you guys this. I forgot. It's in the back here. So, or sorry, he got me a bull. You guys know how I have a bear in the back? Gabe got me this bull over the weekend. It's so cute, right? A nice little bull. Little bull and bear all in the back. So thank you, Gabe. I appreciate that. Means a lot to me. Gergevin banned me saying he looks like he's constant. Bro, Chris, that's kind of mean though. That's kind of, I'm not gonna lie. That is kind of mean. All right, everybody, gotta go. Sunny Coates listening to Amit as I work out at Soho House Paris. Thank you, Sunny, for bragging about how rich you are working out at Soho House Paris because you bought Enphase at 90 cents. We love to see it. Absolute awesome. Thank you so much, man. I'm gonna work on fixing the mic, guys. Thank you for being here. A couple more videos coming out throughout the day. Appreciate all 150 of you being here. Can the bull mount the bear in the background? That would actually be a good idea. We'll see. 2023. Either we get the bull or we get the bear. We are going to see. It's going to be a hell of a year, and we see how that happens. CEO of a company called Audia shouldn't be having audio issues. You know, I've heard that line like 20,000 times, and it sucks because I thought I fixed the audio issues, but I guess I haven't. So, life of a startup. You think you do something, and then you got to fix it. Soho House ain't nothing. Hey, man, it's still pretty dope. All right, guys, thanks so much. I will see you later throughout the day. Bye, everybody.